Our stock of the day is Rio Tinto. It's out with a production update. It's reporting a marginal 1.2% rise in third quarter iron ore shipments as the company ramps up production at its Gudai-Darri mine. Rio shipping close to 84 million tonnes of iron ore from its Pilbara operations in the 3 months to the end of September, compared with close to 83 million a year earlier. Mine copper production, 169,000 tonnes in the quarter, 5% higher than a year earlier. And Rio, which makes 70% of its profits through its iron ore division, saw prices of the commodity improve as top consumer China stepped up its stimulus efforts. However, the company does see China's recovery as uneven. It's also trimmed its Canada production outlook. Morningstar lifting its fair value estimate on Rio shares to $111 from $107, and on the back of high near-term underlying commodity prices. So let's get a view of our experts. Mark, Rio Tinto, what are your thoughts?
Yeah,
and I guess, in fact, it's up around 2.5% today off the back of that report.
I'd be avoiding Rio. I think one of the problems with these companies, and BHP is very much in a similar position, they are very, very dependent, as you just mentioned, on the commodity prices. And we really don't know where that's going. And there's plenty of potential headwinds. I'm not saying that iron ore prices will come off, but it's very hard to be confident of saying, am I virtually certain that earnings per share growth is going to be higher on a 5-year horizon, which is how we look at it at TeamInvest. It's also at the moment at the top of its PE range. It's currently on 13.2% trailing, which is the top of the red. We like to buy companies assuming they pass all our filters in the bottom quartile. And for Rio to be in the bottom quartile, it has to be sub 9. So I think it's pretty expensive at the moment. Now, one of the reasons that's happened is that their earnings have dropped off fairly heavily over the last since 22 and trailing 12 months. They're down nearly 50% of what they were when they peaked in 21. So if you look at it and say, well, the earnings have come off, but the price hasn't come off much, the PE goes up. It's a direct consequence. So for me, it's not predictable enough to be investable.
How does that compare then with the other majors such as BHP and Fortescue in the iron ore space?
Well, BHP, they all have their pros and cons. I mean, if you look at them at the moment, BHP, I think, is better value. It's also paying a higher dividend, and its stability is a bit better, although it's sort of tracking Rio pretty well. And both of them are very, very affected by the iron ore price, obviously. So, but BHP at the moment, if I just pull that up quickly as a comparison, BHP is showing 11.7% on a margin of safety return, whereas Rio is about 8, and BHP is on 11.9p. So it's cheaper, but not a lot cheaper. But its earnings growth is a lot higher. So if you look at their comparative performance, BHP's average earnings growth over the last 6 years has been 33% a year, whereas Rio's has been a lot lower. I'll just see what it was. I can't remember off the top of my head. Rio's has been 12. So BHP's had significantly better earnings growth as well. So if we were going to choose, I would go that way. Fortescue, for me, it's not a company. By the way, we don't invest in any of these. So personally, Fortescue, their foray into green hydrogen and so on, I think it's a bit of a furphy, and I get nervous when CEOs start getting evangelical.
Well, that's the nature of Tricky Forrest, isn't it? That's the way he plays.
That's right.
So, Mark,
remember Hamish Douglas?
Yeah, right. Yeah, okay, well, it hasn't been pretty, has it? Okay, so you're avoiding it, TeamInvest. If you are an investor who holds it, would you stay there?
It's an opportunity cost issue. So depending on what your cost base is and whether you've got to pay tax, the dividend's not particularly high at the moment. I think there's better things to invest in.
Okay.
But so I couldn't say you should sell it. It's not going to go broke or anything.
Okay. Owen, what's your view?
I'd probably have a slightly more, I guess, optimistic look at the actual fundamentals of the business. So I fully agree that it's very hard to predict commodity prices. I don't think anyone knows for certain. But what I would say is that businesses like BHP, Rio Tinto, to extent Fortescue, Vale, these types of businesses have reached efficient scale. And so they have the lowest cost production in the world across most commodities in which they operate, and they've exited most that they didn't have that. And so that does reinforce their competitive advantage, if that's what you're looking for, allowing them to have supernormal profits when commodity prices are high, but then also insulates them on the downside when things go wrong. And so they are able to gobble up the weaker competitors that might be in, EPC or in construction phase of mines and have really valuable assets. So there is a self-fulfilling, prophecy here that higher prices are good for profits, lower prices are also good for widening the moat. All that said, we don't invest in businesses like this simply because we find them too capital intensive. The revenue is somewhat unpredictable. And so we have a rule that basically we look at any investment through a lens of something that we call best expression. So the best expression principle is that before you make any investment, to look at it, to sit back, to distance yourself from your research and to say, is this the best possible use of my money? And you get a reasonably valued, fully franked dividend yield from Rio Tinto, or you could just go and buy a diversified ETF that probably has similar predictability, probably more predictability on the dividend, and similar type of growth prospects. So we would take that bet over Rio or BHP, and that's what we do.
Yep.
So just to give you an exact answer, if I wasn't sitting on a big taxable gain here, I would sell and I would move into an ETF. If I was sitting on a gain that would be crystallised, I'd be very mindful of that, and I'd probably just be happy to hold.
Okay, all right. Okay, that is the view of Rio, our stock of the day.